What do you think accounts for the dominance of credit cards versus all the other modes that you mentioned?
I think it's easier. It's just the easy use to be able to, have your credit card. A lot of places will store your card on file, so you don't even have to like grab your wallet. I think that customers are used to using a credit card, and I think that you have a majority of people that need to kind of that use their credit card a lot more frequently. To stretch their dollar out. If they don't have it in the bank, they use a credit card. So I think a lot of
Uh-huh.
that has to do with it.
So it's convenience and credit.
Yep, absolutely. I enjoy talking about this stuff.
I appreciate it, Dylan. Thank you very much. Very interesting.
Thank you very much.
Welcome to Sterling Insights. Stand out and supercharge your assets. The go-to podcast for financial advisors aiming to grow their assets under management, stand out in a crowded market, and retain assets nearly forever. Are you advising high net worth clients who own appreciated capital assets? Do you want to help them sell without losing a quarter, a third, or even more of their hard-earned profits to capital gains taxes? Then this podcast is tailored for you. Each episode brings you the latest strategies and expert advice from leading financial advisors, seasoned attorneys, and experienced CPAs. Learn how to maximize your clients' wealth, minimize their taxes, and supercharge your advisory practice with actionable insights. Join us on Sterling Insights, Stand Out and Supercharge Your Assets, where you'll gain the knowledge and tools to set yourself apart and achieve unparalleled success in wealth management. Subscribe now and empower your practice for a brighter, more prosperous future. To Sterling Insights, Stand Out and Supercharge Your Assets. I am your host, Roger Silk, and with us today is Dylan Gaines. Dylan is the president and co-founder of International Payment Solutions. Dylan has over 23 years in payment processing, and if you don't know what that is, don't worry, he will explain it to us.
Okay.
He and his firm help businesses optimize digital payments and reduce chargebacks. And again, Dylan's going to explain to us what that all is in case we're not already up to date on it. Dylan, welcome. Thank you for joining us.
Thank you, Roger. It's great to be here and appreciate the time and being willing to chat.
Well, thank you. I am going to invite you. You can start anywhere you want, but maybe a good place is to explain at a very high level what you and International Payments Solutions does, because I'm not sure everybody in the audience is already familiar with that.
Yeah, absolutely. So what we do is our company sets up and facilitates the ability to accept credit card payments. And there are a lot of companies out there that have that ability to set up credit card payments. And, it depends on what type of business you have, what kind of equipment you need. If you're in e-commerce, what kind of gateways you need set up, what kind of integrations and tools you need. So we basically facilitate the ability to accept credit card payments from needing the terminal or a swiper to needing some help on the gateway and all of that good stuff. Yeah.
What would be, I don't know how many customers or clients you guys have. It's got to be thousands and thousands.
Yes.
So I'm going to ask you if there's such a thing as a typical one, just so we can put a little bit of meat on the bones for people who aren't, again, already familiar with what you just explained.
So a typical client for us, we primarily focus in e-commerce. And the reason we do is that we noticed people in the e-commerce space needed a little bit more help in understanding how payments worked and in understanding and avoiding fraud. I mean, anybody who's listening, if you Google, the how many billions of dollars in online internet fraud there are every year, there's so many fraudsters out there, right? So how do you protect yourself? You need to be educated. So we primarily focus in the e-commerce space because we noticed that there needed to be some more education and understanding and handholding on it. So, yeah.
And can you distinguish e-commerce from, because you mentioned earlier swiping, and so most e-commerce is probably there's no swipe, right?
Correct. That's right. Yeah. So, you know, grocery stores, restaurants, dry cleaners, retail stores, we can set up and facilitate all of those face-to-face transactions. But where I feel like we provide the most value is in the online space.
What fraction, like how does your business break down between online and I guess re anything retail is kind of offline, right? Even though people might,
Yeah.
a lot of businesses probably have both presences, right?
I'd probably say 70% of our business is online.
And that
70.
would be clients, vendors, businesses, whatever you want to call them, that are primarily online or
Yeah,
explicitly
they're
online.
selling physical products, they're selling digital products, they're selling some type of a service, and maybe it's like a monthly recurring service, all of those types of e-commerce clients. Yep.
How does somebody like a business, obviously if they're going to be e-commerce, that's the pretty much the only way to get paid, right? Is to accept credit cards. I mean, there are other ways, but
Yeah, ACH, we can set up the ability for them to debit their checking account directly, but you can do the same thing with a debit card too. So, but yeah, primarily credit cards. We are starting to see some businesses wanting to accept cryptocurrency. We got into this space about 3, 4 years ago, and there just wasn't a lot of take rate. Most online businesses didn't want to accept it. We're starting to see a little bit of a trend going up with customers wanting to use crypto and businesses wanting to be able to accept it. Then other than that, it'd be pretty much a wire transfer. So yeah.
but what fraction, if you know, of online commerce is paid by credit cards versus everything else?
I'd have to say 80, 90% is credit card. Even with Amazon, you have your credit card on file, but you're still using a credit card to facilitate the transaction. So
And so most of your business by volume then is credit card transactions. What do you think accounts for the dominance of credit cards versus all the other modes that you mentioned?
I think it's easier. It's just the easy use to be able to, have your credit card. A lot of places will store your card on file, so you don't even have to like grab your wallet. I think that customers are used to using a credit card, and I think that you have a majority of people that use their credit card a lot more frequently to stretch their dollar out. If they don't have it in the bank, they use a credit card. So I think a lot of
Uh-huh.
that has to do with it.
So it's convenience and credit.
Yep, absolutely.
If a merchant accepts payment by credit card, if the gross is $100, it's like what? It depends on the arrangement, but maybe three, three and a half, maybe
Yeah,
more. That's
yeah,
kind
three
of
to 3.5%.
off the top. Where does that go?
So it's split between Visa and MasterCard, the issuing banks that actually issue the credit card, like when you and I have our credit cards in our wallet and they issue it to us, they're getting paid on that transaction. And then it would be payment processors like ourselves that take a percentage of that 3 to 3.5%. So
And
everybody in our business gets the same wholesale price, and then we mark it up to make a profit. So let's just say for easy use, everybody gets 2%. And that's like what we get. And then we go out and we mark it up and we say, we'll charge you 2.5%. And somebody comes in and says, well, I'll charge you 2.2% and I'll be cheaper and this and this. And there's a lot of different ways that payment processors will bill a customer or a merchant or a business. And based on how they bill is how they make their profits. And a lot of times business owners don't understand really all of the different line items and fees that they're being charged. And it's sort of set up that way to not be able to understand it just because it makes it easier to add fees and stuff.
so, for example, let's say Visa. So Visa would charge I don't know what's do they charge a flat percentage to
Yeah.
everybody?
They charge what's called a basis point. So they charge 13 basis points as like an assessment fee. It's basically 0.13%. So 13 one hundredths of 1% is what Visa would charge. And then based on the type of credit card that the merchant accepted, the rest of those fees would be what we call interchange fees. And all that word means is really the wholesale price that the card issuing bank decided to accept. I'll give you some examples. If I was a business owner and you paid me with a debit card that was a Wells Fargo, B of A, my cost or the true wholesale cost is 0.05%. If you use a rewards credit card, which let's be honest, most of us like our rewards points, right? The actual wholesale cost ranges between 2.05% and 2.2%. That's the wholesale cost to accept that credit card, above and beyond whatever the cost that the payment processors charge you. So it fluctuates. You can see there's a big range of types of credit cards and how they're charged and billed. I think there's 980 different categories of interchange fees. Fun,
Wow.
good night reading.
So so on the debit card, which is the lowest end of that, you said it was 5 basis points.
By basis points. That's right. See, you're learning.
So as a merchant, let's say I am accepting somebody's debit card for $100.
Yep,
The bank is going to give me 99.50.
correct.
Okay, the exact same payment, and I take somebody's Sky Miles card or whatever it's called
Yep.
that has the full charge.
Mhm.
The who's getting the 2%? That's the
The issuing bank,
issuer. That's the
issue
issuing bank.
card issuers. Correct.
Visa's still getting its 13 basis points.
Correct.
The bank, maybe it's Chase or whoever it
Mhm.
is getting the difference of the 170, 90 something basis points.
Mhm.
And then there's on top of that. So that gets us up to
Awesome. Yep,
205 basis points, I think you said.
that's right.
And then what's on top of that?
So, it's going to fluctuate, right? So some processors will charge, depending on the risk of the client, 50 basis points, and that would be the processor's profit. Depending if it's like a weight loss product where there's higher risk involved, they may go up to 150 to 200 basis points for on a product like that. If you're selling kids' toys and there's no real risk factor in the bank size, right, or in the processor's eyes, you may get 25 basis points. And that this is where business owners have the ability to negotiate as long as they understand these things that I'm explaining. They'll be able to negotiate and understand what is the processor making and how and what can I do to negotiate
Right.
those costs down. Some of them are hard costs, nobody can do anything, but on the payment processor side, that's where there's a little wiggle room and et cetera, et cetera. Yeah. So
Um, Tell us a little bit about those risks that you mentioned. So
absolutely.
what are the risks and who do they fall on?
Fantastic question. So everybody who has a credit card in their wallet has the right to charge back or dispute up to 6 months. Now, if you have if let's say you owned a business and you gave somebody a warranty or a guarantee or a membership that extended for 12 months, that cardholder now has 18 months. So they have 6 months after that warranty or that membership or that guarantee expires. So now if I'm a processor and I'm looking at a customer who's offering a 1 year membership for $2,000, I know that the cardholder now has 18 months to charge back. So I'm looking at, from a risk perspective, a potential of 18 months of chargebacks that could come trailing in. So immediately that puts that person in a category, a higher category of risk. Travel is another one. If I book a travel date that's 5, 6 months away, there's future delivery. Therefore, I can charge back 6 months after I take that vacation, right?
I,
So
I being the credit card holder.
that's right. You as the card holder. Um,
Okay.
Another area that is extremely risky as well is what we call implied results. So supplement companies. If you take my pill, Roger, you're going to lose 20 pounds in 30 days. Well, I'm implying the result. You may not lose at all. You may take my weight loss pill, go sit on the couch and eat pizza, and you don't lose a pound. And you're like, well, Dylan told me I was going to lose 20 pounds in 30 days. I want my money back. So things like that that have implied results or higher disputes, um, we as payment processors look at that as a risk of that person wanting their money back. Now, let's say you, Roger, um, let's say I'm the company. You dispute the transaction. Visa is going to come in, Visa or MasterCard is going to come in and they're going to debit my bank account. Well, guess what happens if I don't?
Yours, you
Huh?
as
I'm the owner. I'm the business owner. I sold
okay,
the
you're the
product.
business owner. Okay. I thought you were
That's
you.
okay.
Okay. So
That's okay.
you're the business
I'm the
owner.
business owner. I sell you a product. You say you want your money back. You call up your credit card and you say, Dylan told me I would lose 20 pounds and I didn't, and I want to dispute the transaction. That issuing bank immediately debits my bank account. What happens if there's no money in my bank account to handle that, to pay you back? The payment processor that that I'm going through pays you back and they lose the money. So that's
The
why
processor, not the bank.
the processor. I, as International Payment Solutions, am holding the risk and the liability of that credit card transaction. And for that risk, I am receiving, you know, profit on the whole transaction itself. You see what I'm saying?
I do see what you're saying.
Yep.
Yeah. So that it's basically chargeback risk, not credit risk.
Correct. Chargeback risk.
Credit risk is borne by the bank.
That's correct.
Okay, so the banks can make their money well, obviously by the interest. When
Correct.
the bank charges a fee on the credit card, does that
Mhm.
go to the bank?
It does. It goes to the issuing banks. They're the ones who make that spread, that interchange.
Uh-huh. Okay. So you as I know you've told me this about
Payment processor.
20 times, the payment processor.
Uh-huh.
It it so you're basically bearing the risk of somebody going to a pizza joint, paying with their credit card, and then saying the pizza was cardboard. I don't want to pay.
Correct. Now, hopefully, and in most cases, the money will come out of that pizza joint's bank account, and they'll have enough money in their bank account to move the money back over to the customer's credit card.
Uh-huh.
Where we get involved in the risk is if that pizza joint NSFs and doesn't have enough money in their bank account. That's when the issuing bank goes, oh, Dylan, you're the processor. You process this transaction. There's no money in the pizza joint's bank account. Cough up the money. And we got to cough up the money. And that's the risk that we take for being involved in the transaction and getting a profit.
What's the largest hit that you guys have ever taken on that kind of a chargeback?
That's a great question. That's it's a sore spot. It was
I'll bet.
2024. We had about 300 merchants that were all selling different kinds of electronic gadgets online and supplements. And we don't really know everything that happened, but basically they got a hold of a bunch of stolen credit cards and they processed all of those stolen credit cards through the merchant accounts. and they closed all the bank accounts. They let all the chargebacks come in, and we lost several $100,000. And
Wow.
also the income that we were making from those 300 merchant accounts. And they kept those accounts going for 6, 7 months. And then boom, overnight just hit us like a
So that was clearly organized fraud.
correct. It was. And, we tried going after them. We hired lawyers. Everyone just scattered, and we found a couple of them and got a little bit of our money back, but nothing close to like what we took in losses. And it's funny because we take very, 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 very few losses. We're probably at 4 to 5% losses every year. Last year was obviously a lot different. And now we're kind of on the road back up again and recovered from that loss. But, we also set aside reserves for these types of situations. So we're
Yeah.
smart about how we manage it. But yeah, that was yeah.
Did did law enforcement give you the time of day?
No, we had to hire like private investigators and lawyers to try and go after these guys. And a lot of them were what we call straw signers, meaning like they really didn't have a lot to do with the company. They just signed the merchant application. So they were like, I don't know what you want from me. I rent my house. I've got $500 in my bank account. What do you like? I don't know what you want from me. So there wasn't really much to go after. But
Uh-huh. So do you have any, because you didn't have anything to do with the issuance of those cards or anything, or these cards were all stolen. So,
right.
and then is there a limit on the reporting period for like some card
Yeah,
holder card gets stolen?
correct.
Is there an obligation on the cardholder's part to report that somewhere to limit the cardholder's liability?
There is, I don't know what the time frame is, but these guys are pretty fast about getting a hold of the card data, however they do, and making those transactions almost instantly. So by the time you even realize, or you get, one thing I will say is a lot of times people used to have to wait to see their bill and go, wait a minute, I didn't charge this, and this. Shoot, I think my card got stolen. Issuers now are like sending text messages right away. And they're like, hey, Roger, did you do this transaction? Just want to make sure. But sometimes it looks they're smart. These guys like they kind of see like wherever they're getting the cards from, a lot of times people they'll hack into a website that you went to, right? And let's say it's a gym membership, and the gym software was left open, and they stole all these credit cards from the gym. Well, if they go buy something that's like you go buy a muscle building supplement, that doesn't look strange. But if you went and bought, tampons or yeah, a thousand tampons, they'd be like, wait a minute. They're smart about how they go about
Mhm.
getting this. But the answer is the card holder is supposed to obviously report, and the issuing banks do try to notice suspicious activity, but in this case, they got many transactions through, and yeah,
Uh-huh.
yeah.
So what distinguishes international payment solutions from, I mean, you probably have a number of competitors.
Oh, absolutely. I think it's the personal service. I think it's the fact that we have people that will pick up the phone and talk to you, that will explain certain things to you, that will look through your terms and conditions for you and tell you if they feel like, here's what Visa and MasterCard's best practices are, as far as your guarantees or your promises or your thises or that's. Obviously, we want you to sell the product, but we don't want you to start moving into boundaries that you don't want. And And I think just being able to pick up the phone, help people fight chargebacks, help them look at their systems and figure out certain flags to turn on to detect potential fraud and helping them reduce fraud. I think we're just very hands-on. We're not the 400-pound gorilla, the Bank of Americas, that have millions of customers, and you wait on hold for 4 hours and they're just like, okay, here's your account and go have fun. We take the time to really work with the customer.
Uh-huh.
Yeah.
Um, I find all this super interesting. I hope the audience does too. Uh, let me ask you some slightly less technical questions.
Of course.
My understanding is that you founded an entrepreneur club that
Yeah,
works locally with business owners.
I do.
Is
Yeah.
that something that you can tell us about?
Well, I didn't found the club, but I'm a part of a few mastermind groups. So one is the Speakeasy Mastermind Group. It's a local, they have a bunch of local chapters. I'm part of the Tampa chapter, and we meet once a month, and it's incredible entrepreneurs, and it's a great brotherhood, and we help each other a lot. The other one is the Four Rooms Mastermind Group. That's a couple hundred of us, and we do annual 3 events every year. And then CEO Life. And then I'm going to be starting a like a nonprofit organization called Payments for a Cause, where we're going to work with business owners that want to switch over their accounts to us, and then we're going to in turn take some of those profits and donate it back to whatever cause they're passionate about. And so that's kind of the future horizon for international payment solutions.
Uh-huh. Um,
Yeah.
so that's three and then a fourth that's on the way.
Hope that's on the way.
Yeah, okay. Um, what so most people, I think, even fairly sophisticated finance people, don't come into contact directly, right? That way most of us come into contact with what you do is if we want to buy something and the merchant says, well, that's going to be a 3.5% surcharge because that's how much credit card costs me.
Yeah.
Um, are there some ideas or rules of thumb that people who aren't actually right in the business on one end or the other that you would want to tell people, hey, you should think about this, know about that?
Um, I think that you brought up a great point when it comes to surcharging customers and clients. Um, when they first came up with like cash discount or dual pricing or surcharging or adding a convenience fee or a this fee for using your credit card, um, most businesses didn't want to do it, and most businesses said, I don't want to upset the cardholder. I think it seems cheeky. I think it's cheap and this and this. I am noticing a lot more customers like you and I used to paying a little bit extra now for credit card fees. You know, StubHub, Ticketmaster, airlines, all these different places, they charge, gas stations, they've got the cash price, the credit card price. And I think even myself, I'm more used to like just seeing these things. And so I think um if you haven't done it, I think start looking at adding in some additional costs for credit card fees to help you kind of reduce some of those overall business costs and expenses.
Uh-huh.
Yeah.
Um, why? So my understanding is if you have a $10 credit card charge or $100 or 1,000 or even 10,000, you, as the merchant, you're going to pay the same percentage.
Correct.
Why is that?
Um, it's based on the rules of Visa and MasterCard and how they laid it out, and what the type of credit card that is accepted, and there are actually tiers. Just so you know, there's like high ticket interchange fees, low ticket interchange fees. So there is a sliding scale of it. But if you stay between 100 and say $5,000, um, Visa and MasterCard just look at it as these are the buckets and these are the tiers, and this is how we're gonna price it and bill it.
What fraction of the market? So you said about 90% or so of online commerce, I think, is credit card.
Yeah.
Of that, do you know what fraction is? I think Visa is the biggest by far, right?
Out of question.
How much is it?
I think the last report I saw was 69%.
And then what's second? Amex or
20
MasterCard?
MasterCard's actually second place, then American Express, and Discover was actually bought by MasterCard, so there really isn't a Discover anymore.
Right.
Uh, and so it's either Visa, MasterCard, Amex. Amex is in third, and then you've got your like kind of diners cards and JCB cards, which is Japanese, and a few other smaller, but it's minimal compared to Visa is 100 is by far 69%, then it's 20 something, and then Amex is right behind that.
Okay.
Yeah.
Are Amex's fees higher?
They definitely are. And part of the reason is if you remember traditionally American Express, if you had an Amex card, you had to pay the bill off in full at the end of the month, which means they weren't collecting all that interest from the cardholders. See, Visa makes a lot more of their money off of you and me paying that monthly, that minimum payment at, 29.99% APR, right? That's
Yeah.
where they make their
Yeah.
money. So they give the merchants a little break for because they're making it well, Amex wasn't making that kind of margins on the card holders, so they were always the most expensive. Now they've got like the Amex Opt Blue, and now you can sort of carry a line of credit, and they're making more, so they've come down, but they're still traditionally the most expensive, I'd say.
Uh-huh.
Yeah. Uh,
A lot of our audience, Dylan, is financial advisors.
okay, good to know.
And I'm wondering if, I mean, it's not necessarily a business that they get paid a pretty unusual way compared to most people.
Sure.
Um, but do you have any of them as merchant clients? And are there things that financial advisors should be thinking about with respect to how to take payments that you could enlighten them on that they maybe haven't thought about before?
I have a few financial advisors as referral partners
Uh-huh.
because if you're going to go into a company or a business and advise on their finances, you're always going to look for how do I lower the bottom line, right? What are your hard costs? You've got employees, you've got rent, you got insurance, you got phone bills, you got credit card processing fees, you've got all these hard costs. So I've been brought into, I've worked with some financial advisors that are working with companies to reduce costs and said, hey, Dylan, can you take a look and do a cost analysis for my client and see if there's anything you can do to reduce their processing fees? And that's been a really good working relationship that I've had with some financial advisors. As far as financial advisors themselves accepting credit card payments, um, the ones that were working that were charging, let's say 15, $20,000 to come in and do a whole consult. A lot of them were just taking ACH payments or wires, and very few credit card transactions because of the size of the tickets. They were like, wow, I'll pay 3%. So
Yeah, okay. So that's that, and so do you have any solutions for that? If someone wants to provide clients with the convenience of credit card payments, but they're large tickets, and so it's going to be
yeah,
if it's going to be what, $300 or $350 on 10,000.
Sure.
Are there
Um,
any solutions for that?
you can, um, so there is a way to do like a shared surcharge if you want. So like if I'm a customer and I'm paying you $15,000 or $20,000 to come in and consult me, I would be a little like, wow, you're gonna charge me more now to use my credit card. It may be a little bit, I don't know how I'd feel if I was a customer and you did that, but let's say let's just say 3.5%. You could say there's a 2% fee. Now, would I as a card holder be like, okay, fine, 2%, I'll pay it. So now you as the financial advisor would only have to pay 1.5%. So you cut your cost down by 0.5% right there by sort of sharing the cost with the customer.
Right, right. But
Right?
that's just allocating between you and
It's
your client.
allocating for sure.
Yeah.
Yeah.
Okay.
Um, other than that, I mean, depending on if these are companies or corporations, corporate credit cards have a very wide range of interchange fees. They can go from 2.2, sometimes as high as 3%. We do have a software that goes for and adds in all of the different details to the credit card so that it gets the lowest possible interchange fees. And we've saved people that accept a lot of corporate cards 0.5%, which, 0.5% on 10, 15,000 isn't bad. So that's one way that we
Right.
can help reduce that.
Uh-huh.
Sorry.
Um, what's the difference? You mentioned ACH,
Yeah.
bank wire. Um, and I know a lot of institutions charge either to send or receive a wire, and
Right.
it's kind of a little bit inconvenient for people who don't do it all the time.
Sure.
ACH is a different system.
It is a different system than a wire transfer, yeah. So
Uh-huh.
in that situation, you are the business owner. You go into the gateway that we give you. You type in the customer's routing number and bank account number, and you go in and you pull the funds out of their bank account directly. Whereas a wire is pushed from me to you. You will
Okay.
pull the money out of my bank account. So it's a
Okay.
pull and a push.
So on the wire, the sender has the protection that unless they order and authorize the wire, it won't happen.
Correct.
What's to prevent somebody on ACH from having the vendor, let's say,
Mhm. Go ahead.
request more than they're supposed to have and take more than they're supposed to have?
Well, that's when the person has the right to do a dispute and dispute the transaction. So remember I was talking about on credit cards, it's 6 months. On an
Hmm.
ACH, it's 2 months. So you get
Okay.
2 months to look at your bank statement, make sure, hey, Roger charged me too much. Call up my bank and say, whoa, hang on a second. I didn't authorize this or he took too much. So yeah, so
Uh-huh.
that's the protection that they have. And a ACH transaction usually costs 30 to 50 cents. That's it. There's no percentages, there's no interchange fees, there's nothing. So it's a much cheaper way. And I would recommend if I was a financial consultant, I would recommend that everyone paid me through ACH.
How much information, Dylan, can be sent along with the payment when the payment's made via ACH?
So if you go into the gateway, it will have, the person's name, address, email, phone number. On the receipts, it's not going to show obviously the routing and account numbers. Those will be truncated. Um, you can add invoice numbers, you can add customer ID numbers. You can put a like a memo. There's a section for put like notes. This is what this was for. And then there's an option, then you email that receipt out to the customer. So you can put a
Uh-huh.
lot of data on it.
So if a customer, let's say an advisor, consulting or whatever it is, and say he has a set service, and so it's the same price. He sells
Yep.
it to us. And when he gets a payment, say he gets $1,000, it's going to say it came from Dylan Gaines, the amount, the date, and then can he have you add an invoice number, 12345 or whatever,
Yeah,
and that all comes through on ACH?
it does. And in fact, he can even create an invoice and send it to the customer with all of that data. And then they click on it and they type in their routing and account number.
So is that something that the merchant would set up with you?
Yeah. Yeah.
So
We can set
a
up the
merchant would
ability.
have an account with you, and then if his clients or customers want to pay by ACH, and so that's different from what the QuickBooks company Intuit.
Into it. Yeah.
Is that what they're doing? And that's their
So
version of it?
they do. I don't remember. It's been a while since I haven't really initiated too many QuickBook invoices, but I think whenever I've received an invoice from QuickBooks, it only gives me the ability to put in a credit card. I don't know if it gives me the ability to put in my routing number and
Oh,
my
okay. So if someone wants, if a merchant, like one of your customers
yeah,
wants to be able to bill that business's customers
yep,
and have them pay by ACH, they make an arrangement with you, and then they produce an invoice,
yep,
and all the
yep,
customer has to do is put the customer's routing number and account number,
yep,
and then presumably invoice information. Or will the invoicing preserve all that so that all the customer, so John
yeah,
Smith has to put in, routing number 12345 and account number 123456789.
that's right.
And okay, all right.
That's right. And then the other thing too is like, let's say I wanted to break up the payments. Let's say it was like, oh, I don't know if I got 15 grand right now. Could I pay you in 3 monthly installments of 5,000? I can go into the gateway. I can create the invoice. I can say on the 10th of every month, bill Roger $5,000. It gets sent to you. You click on it. You put in the information. You click, I agree. Boom, 10th of the month, it dings you. 10th of the next month, it dings you. 10th of the next month, it dings you. Or you can even do recurring. Let's say you got a membership, you've got of whatever you got. We want this to be ongoing, recurring until Roger cancels. Boom, click on it, fill out the data.
Uh-huh. And the person has to have a checking account for that, basically, right?
100% they have to, yes.
Yeah, okay. Well, I think most people have that.
I would hope so.
Yeah. We could go on and on, Dylan. I find this fascinating.
I'm
I
glad.
I want to give you the opportunity I haven't asked you a ton of stuff. If there's something or some other things that you particularly want the audience to hear that I haven't given you a chance to talk about yet.
Man, I don't think so. I think hopefully I've given some good information about how merchant accounts work and how the fees are broken down and things that they can do to look at these costs a little bit closer and hopefully it helps people out. So I
Yeah,
appreciate
I've learned a lot. Thank you.
it.
Um, if our audience wants to learn more about what you're doing, either you or what International Payments Solutions is doing, how can they find out more information about you guys?
So you can go to our website, which is intpaysol.com. So it's the first three letters of International Payment Solutions.
Okay, and I'm just going to ask you to repeat that in case someone's just listening.
Yeah. So it's www, obviously, intpaysol.com. And if you want to get a hold of me directly, you can reach me at Dylan, Dylan Gaines, Gaines, at intpaysol.com. And I'd be more than happy to chat and answer any questions you guys have. I enjoy talking about this stuff.
I appreciate it, Dylan. Thank you very much. Very interesting.
Thank you very much.
Thank you for listening to another episode of Sterling Insights, Stand Out and Supercharge Your Assets, where we provide the info you need from successful leading financial advisors, lawyers, and CPAs. Your hosts, Roger and Catherine Silk, invite you to learn more about Sterling Foundation Management by visiting sterlingfoundations.com.